Ready.
Hey, everybody, and welcome back to the show. Today, I'm so excited to have our expert guest on, Clay Malcolm. Clay, thanks for being here.
Glad to be here, Suja.
Awesome. So, everybody, Clay has been in the self-directed IRA and 401k industry since 2011, both as an educator and investor. He combines his 20 plus years of educational experience and his expertise in self-directed account strategies to educate clients, CPAs, CFPs, and real estate professionals throughout the country on the benefits of self-direction. Clay holds the designation of Certified IRA Services Professional and has served on the American Bankers Association IRA Steering Committee. Well, I love talking about self-directed IRAs because it's such an important resource for investors or potential investors or new investors to really understand and know their options. So thanks so much, Clay. Why don't you give us some color on your background and how you got into the whole self-directed IRA industry?
Glad to. Well, I'll say this. Part of the reason that I became a self-directed IRA investor is because I was not paying attention to my retirement very well, and I was behind. And so I got interested in it because I needed to do it for myself. And I was also in a place where I could transition myself professionally. And so I took my education background and my management background and kind of put it to work in the self-directed IRA space. And so that combination of things for me personally has really been powerful because I feel like I've caught up and I'm going to get to retire, hopefully, in the not too distant future, and on my own terms. So that was really the impetus for me. And I'll be the first one to admit, I was so surprised that we are able to use our tax advantaged accounts to invest in alternatives. And specifically, I think, for our purposes, real estate. And that's certainly been my focus in terms of being an IRA investor. I, I never knew that I could combine the tax advantages of my IRAs with the returns that I could get in real estate. And so that was a really powerful thing for me. The idea sunk in. I understand how real estate investments kind of work. Have owned houses and rental houses and things like that, and so it all just kind of came together in that way. And one of the things that I find in my job that's really a satisfying piece of the business for me is that most people still don't know that your IRA can invest in these types of things. And so I really do get to kind of give people a new idea, see if it works for them. And lots of times, once they understand that their IRA can be a real estate investor and keep the tax advantages and all that kind of thing, then they start to their mind starts to work on it. And eventually they find something. Sometimes it's very soon, sometimes or very quick, and sometimes it's not. But usually they'll find something that makes sense to them, and this gives them the opportunity to put those tax advantage dollars to work and earn some money that way.
Awesome. So let's just break it down for the listeners. And you can't just take any 401k money and turn it into an IRA, right? So what would somebody who's interested in this need to kind of look into before they could set up a self-directed IRA?
Well, one of the things I think is the biggest hurdle is vocabulary in our industry is a mess. And so it's very difficult to, you hear some terms and things like that. So I'll try to just make it as succinct as I can. Um, your IRAs have always been able to invest in real estate and other alternative assets since the 1970s when they were established. What basically happened was banks and brokerage houses took a look at the rules for IRAs and they said, oh, well, we'll be the custodian for your IRA. But while your IRA is with us, it can only buy the things that we sell, which are publicly traded securities. So stocks, mutual funds, things like that. And when the stock market is operating in kind of a consistent basis, there's not a lot of reason to balk about that. It's no harm, no foul. It's a business model that they built around the rules. But one of the things that I think people don't understand is that the IRS never said to IRA custodians, and all IRAs have to have a custodian. You have to handle, Mr. Custodian, Mr. and Mrs. Custodian, you have to handle all the assets that are allowable by law. So the custodians actually chose which assets they were going to service. And so it took a while for IRA custodians to realize that there was a marketplace and a need for investors to invest that tax advantage money, the money that's in those accounts, into alternatives, physical real estate, precious metals, private equity, private lending, all of those things. And so what I would say to you is that understand that it is the custodian that decides which of those assets that they're going to service, right? So if you, and one of the things that the IRS does not limit is how many IRAs that you have. You can have multiple IRAs operating simultaneously. So it's very common for us to have an IRA holder who is investing in real estate with us. And at the same time, they have an IRA at a bank or brokerage house, and they're investing in stocks and mutual funds and those things as well. So the amount of control that you have about where your IRA money is positioned may be greater than you think. And that positioning, with what you're doing there, really by having your account at a custodian that handles alternatives, is giving that money access to those assets. So I would say this, just I always encourage everybody to take an inventory of all the tax advantaged accounts that they have, and then find out about which ones can be combined, which ones can be moved. Most 401k plans, if you're still employed at that company, often that is not mobile. So sometimes you do have some restrictions about money that can be moved and where it can be moved and things like that. But finding out is really the first step, because it's often very possible for you to take some of that tax advantage money and to be able to combine it with the returns that you might make on a real estate investment. So that would be my encouragement for folks, and to understand that the self-directed terminology, it's not actually an account type. It's really just a descriptive term. I know that makes it even more confusing, because Schwab or Fidelity or a brokerage house also has quote unquote self-directed IRAs. And what that means for them is that you can choose between, let's say, 10 mutual funds and 5 stocks or something. I'm making that up. But a self-directed IRA at a company like Advanta that handles alternatives means that you could have that money invest in real estate or make loans or precious metals or any of the other things that I mentioned before. So all of those other allowable alternative assets. So don't be afraid to ask questions about the vocabulary. Don't be afraid to take control and find out what you have. Yeah.
Okay, awesome. So what would you say, Clay, is a motivation for people to start looking into SDRAs? I mean, self-directed IRAs. Like, why is it that people tend to start saying, okay, I want to look into this and make this happen?
Sure. I think there's a few common ones. One is, there are a lot of people who've experienced some pretty radical stock market volatility. And, for those of us, and myself, I include myself in this, who don't, have a super strong grasp of the stock market and its fluctuations, that's a really scary thing, right? I don't kind of understand it. And my gosh, my portfolio can lose this amount of money in a couple of days. It just, it can be disconcerting. So I think that that's one thing. And the idea behind, moving into an asset class like real estate, again, for me, it's much more intuitive. I kind of understand how real estate works and things like that. That's not to say that I couldn't make a bad investment or lose some money. You can, but I understand it more. So my mind has a little bit more sense of peace about how my money's going to perform. And that brings me to my second reason why people do this is often they find an investment that they really like. Um, Either a syndication or a syndicator that they like, or a particular investment strategy. And what they want to do is take those returns that they're earning in that investment strategy and essentially graft them into the IRA so that you combine the tax benefits. So again, I think that they're in some cases the motivation is, oh my gosh, I really want to invest in this opportunity, this new company or this syndication or this property or whatever it is. It sounds great, but I don't have any personal money that's available. Oh my gosh, my IRA can invest in it. So I can take a portion of my IRA money, move it into position and invest in it that way as well. so I think that those two things are really big ones. I also think that, the the idea that you are going to be able to adapt, diversification is something that almost all financial professionals will tell you is a basic tenet of the way to structure your money. And I think that diversification amongst publicly traded securities, that's a fine thing, and it works in a lot of cases. But your ability to diversify or to adjust to the economy in terms of what investments you can get into and their performance, whether it is correlated to the stock market or not, your ability to do that kind of diversification is so enhanced by having a self-directed IRA that I think that's really the third prong of what drives people to look into it is, hey, I want to make sure that I have the as much diversification as I can accomplish.
For sure. That's awesome. So now let's just talk about the costs associated with setting up a self-directed IRA, because I think that's sort of important for people to just have an idea of. So with Advanta, what does it, if someone wants a typical investment amount, at least in real estate syndications, which is one thing that I focus on, is $50,000. So can you talk about the costs associated with setting up an account?
Yeah, I'd be glad to. And I agree. And again, well, not again. I think your due diligence on as an account holder on everybody involved is really important, and that includes ROI. So if you're thinking about self-directed IRAs, and you asked me this earlier, one of the things you need to do is vet the self-directed IRA custodian, find out what their track record is, and if their fees are in line and all that kind of stuff. So I do encourage that, because it's one of the things as investors, I think it's a responsibility of ours in terms of managing our own money. So getting back to Advanta fees, kind of, or at least the industry ballpark, a lot of Advanta fees certainly, and our competitors as well, often are based on our bookkeeping labor. So I mentioned the fact that banks and brokerage houses, sometimes their IRA fees are hidden in commissions that they make on what your IRA buys. So for a company like Advanta, we don't sell any assets. In fact, we're an incredibly neutral part of the equation. We don't give any tax, legal, or investment advice. Our job is to basically document the activity in the account so that it gets to keep the tax advantages that are associated with the account type, whether it's a traditional or a Roth or a HSA or whatever it is. So that's really our job. You tell us what you want to do in terms of investments and things like that. It's not our job we're not advisors in any of those regards. And so you really are hiring essentially a bookkeeper and an administrator. So that's what we charge for. And I'll just take the example of, let's say, a $50,000 investment into a real estate syndication. So we charge $50 to open the account, and that's obviously one time only. We charge a transaction fee when an IRA invests in an asset, and also when that asset is completed, whether that's a sale or the timeline comes to a conclusion. So, and that would be $95 for real estate syndication. So $95 to get in, and when the syndication part ends and you get paid off, $95 at the end. And then the only really ongoing fee for us would be an annual fee, and that goes for the ongoing bookkeeping as well as the annual reporting to the IRS that's required of the custodian, things like that. And at $50,000, you would definitely pick our flat annual fee, which is $295 per asset per year. So, and if that 50, and I hope it does, that 50 becomes 100, your fees don't go up because it's a flat fee for the bookkeeping on that particular asset. So, I would say that, in a broad scale, thinking about what are you going to be paying a self-directed IRA provider for the service that they provide, I would say that most people are looking at somewhere between, a few $100s, and maybe, if there's a lot of activity in your account or you have a lot of assets, it could definitely go up into the high 3 digits. And it can go beyond that too. I don't mean to say that you can't get, some fees that are $1,000 or even a little bit more. But for most people, when they're talking about a syndication, it's maybe 450 something ish the first year, and then $300 a year for the years in the middle, and then that 95 at the end. but you're thinking usually in terms of hundreds and not thousands, and you're not talking about taking percentages off of what your money is making. You're actually, it's a fee for service model.
Okay, makes sense. Well, thanks for breaking that down. Very helpful so that people just kind of know what they're looking at.
Yeah.
And I want to expand on that and talk about the LLC, opening an LLC. I'm probably going to get the terminology wrong within the self-directed IRA. In what cases, can you explain that, and in which situations would that be useful and in which would it be not necessary?
Yeah. Well, it's a really popular topic of conversation when it comes to self-directed IRAs. In fact, I've heard some people say, I heard that my self-directed IRA has to have an LLC as a subset in order to invest. And so let's just start there. Your IRA can have a subset of, or an investment or entity that is usually an LLC as a subset of it. And the common terminology in the IRA world is called checkbook control. And I'll just give you the garden variety setup. And what that is your IRA has some money and you set up a new LLC. The IRA purchases 100% equity share of the LLC. So it's a single member LLC. Again, this is the most common version. It's not the only one. And then you also would name yourself as you personally, the account holder, as the manager of the LLC. And so the net effect of that is that you have a check in one hand of IRA money that's made out to the LLC. And in the other hand, you have the state document saying that you're the manager of that LLC, that legal entity. And so you go down to a bank and you open a business checking account. And as the manager, you're signing the checks. So hence the term checkbook control. So the net effect is that the account holder is actually writing checks on IRA money. So a couple things that I just have to say. One is the rules follow the money. So checkbook control does not absolve you from any of the investment rules that the IRS has for IRAs. And the second thing is that you do have to keep track of what's going on, right? So you are then the manager of a legal entity, that LLC. So there is some bookkeeping that's involved in it as well. But the thing that I think are some really legitimate advantages or strategy gains to think about are this. If your IRA's money is at an LLC and you're able to write checks on it, a couple things could happen. One is if you're invested in an asset class where you have to disperse a lot of money, let's say you're buying real estate and you have to do rehabs, and so you're paying a lot of vendors, that can be very convenient. Instead of coming to the IRA custodian every time and saying, hey, pay the plumber, hey, pay the electrician. And it's not that we don't do that, and we do it for free, so it's not a big deal that way, but it is much more convenient. And if you're going to invest in things like tax liens or by buying properties at auction, the ability to take a checkbook and be able to pay for the winning bid on the spot, it's very convenient. You don't need to involve the custodian. So there's some convenience factors that go in. And then the second thing is that if your IRA is going to have a lot of activity in it, meaning buying and selling assets or having a lot of, maybe small dollar assets in them, an IRA custodian, as I mentioned before, we charge for our bookkeeping labor. And so small dollar value assets are the same amount of bookkeeping for us as large dollar. And so if the transactions take place at the LLC level, the custodian is not having to do all that work and do all the bookkeeping. And so we actually just charge for that one asset, that one LLC that is an asset in your IRA. Then the LLC could own 15 things or 20 things and be doing all kinds of activity, and we wouldn't have to charge for it. So there is a way, in some cases, depending upon what you're doing in your IRA, checkbook control can also save you some fees from the custodian. The third thing I'll just mention, and this is different in every state, is that some people feel like an LLC is an important part of their liability protection. And single member LLCs are a little bit different animal in some states than it is in others. But if you feel like, or your legal team feels like an LLC as an active investor gives you some liability protection, then that's another really legitimate reason, I think, to set your IRA up that way. But understand that it really is a strategy decision. And if your IRA, which is also a legal and financial entity, wants to invest directly into a syndication or any of the other assets that I've mentioned, that's possible too. So it really is a strategic choice.
Okay, awesome. So Clay, thanks for explaining that. So if you posed this question earlier, and I'd like to get your take on it. If I'm raising capital, how do I get IRA investments from other investors? And what would you say to that?
Yeah, well, I think one of the main themes that I'm talking about a lot is that if you take nothing else out of this conversation, is that your IRA can be an active real estate investor, right? So you, as the account holder, you get to control what it invests in, but please, under any circumstance, don't feel like your IRA has to be stuck in some investment or stuck in publicly traded securities. That's not the case. You have the ability to make it be an active IRA real estate investor. And so for syndicators and for anybody who's really kind of out there in the real estate marketplace at this point, you kind of have to have some adaptability and to know what the pieces are that can be moved around. So for syndicators in particular, I would say when you are talking to a person who might be interested in investing in the syndication or the property that you're going to put investors together for, understand that you're probably talking to or could be talking to two investors, their personal money and their IRA money. And of course, they are two different investors because they have different tax status. And so they operate kind of side by side, but they are different. And so it's not uncommon for somebody to not have any personal money that's available for syndication, but they might have some IRA money that's available for syndication.
Yeah.
And so I think that the provocative question, it doesn't have to go a whole heck of a lot beyond this, is, hey, did you know your IRA can also invest in this syndication? And if they say no, but that sounds interesting, then all you really need to do is just point them in my direction or the direction of some other competent custodian, and they'll give you the information or have that explain to that person how it works, what they're getting into and all that kind of stuff. You don't have to actually have the whole knowledge base at your disposal, but asking that question of or posing that idea of, hey, did you know your IRA can be an investor as well, could mean either an investment that you wouldn't have gotten before, or it might mean an additional investment. I know I've certainly invested personal money and IRA money in the same venture side by side because I believed in it, right? So that's just a way to think about it, just that an IRA can be a real estate investor. It's possible, and hopefully it'll work out. It's not for everybody, but at least the idea of introducing that idea gives you the possibility that money might come into play.
Awesome. Well, thank you so much, Clay, for coming on the show and helping us all understand more about how to use self-directed your IRA money for other kinds of investments outside of publicly traded stocks, securities. So yeah.
I'm always happy to do that.
Yeah. Well, thank you so much. Why don't we take a minute, give the listeners a way to get in contact with you and anything else you'd like to share? Sure.
Well, I welcome you to just contact me directly. My direct office line is 470-695-0620. Happy to have a chat with you on the phone. You can also contact me by email, which is cmalcolm, CMALCOLM, @advantaira.com. Obviously comes directly to me. And I will also say that the Advanta IRA website, advantaira.com, has a ton of educational material on it. And we do a series of webinars and other events and things like that. We want you to get the information that you want and need to be successful at self-directed IRA investing. So please do use us as a resource. I'd love to talk to you because that's the fun part of my job. So please do feel free to reach out. But we have other resources as well, and hopefully that when the combination is right, then you'll understand that your IRA can invest in a particular thing, and hopefully it'll work out great for you.
Awesome. Well, I hope you all get in touch with Clay and learn about your options when it comes to your retirement accounts. Thank you so much for coming on the show, and we'll talk to you next time, Clay.
Sounds great.